Let's talk more about all this and more with Jay Woods of Freedom Capital Markets and Victoria Greene of G Squared Private Wealth. I got to say, Jay, I'm a little bit surprised that the markets are holding up as strong as they are, even as yields spike. Are you?
I am very surprised. I was surprised first yesterday when the 20-year auction went off at 1 o'clock and the market sold off on that news. Doing this a long time, we did the side-eye look at the tape and it was like, this is what caused us to sell off. It wasn't the Moody's downgrade. It wasn't the Walmart tweet over the weekend. This is what we're worried all
But now yields are higher now than they were yesterday. Yeah. And the market's going up. So clearly, respect to everybody, that was wrong. Well, markets didn't sell off on the 20-year auction because if they did, they would be down again today because the 20-year bond yield is higher now than it was yesterday.
And that's the befuddling part of this. Maybe it goes to a narrative that this is becoming a little bit of a new normal. We are getting through earnings season. We're going to talk about NVIDIA all next week. That will be the bellwether. But right now, this is the part of the market that's got us confused. I watched the 10-year, too, the 10-year being the bellwether. It is ticking up 4.6. Technically, we've got an inverted head and shoulders bottom there. That could really cause a spike 5% quickly. Yes, it may become normal down the road. But right now, if this market was to absorb a shock to 5%, equities are not going to hold on the way they're holding on now. So to me, something's going to give, and I think equities are pausing. Not sure why we're rallying today. It is discretionary. It is technology, not the sectors that would be leading in an environment like this. Utilities, worst performer. But it is a little befuddling, and I believe that the equity market will tire out if this continues on this path.
Victoria, you agree, if I'm not mistaken. You're looking at around 480, maybe anywhere between now and there becomes more tough sledding for stocks. What do you think?
Sure. I think 4.5 years, we're able to kind of deal with it and take our medicine. We start creeping up 4.7, 4.8. We get a little bit nervous. And at 5, I do think markets absolutely start paying attention. And you are seeing small caps pay attention. You're not seeing it in the large caps. You're not seeing it in the Mag 7. We're all rah-rah, spending, AI. UAE and the Middle East is throwing so much at tech right now. It's a huge stimulus for them. But look at what small caps are doing. They are reacting to the rise in yields. And at 4.7 and above, 4.8 and above, we think we're starting to start to see the large caps react as well. So maybe the market's not paying attention right now, but it certainly will above 4.7 in my opinion.
And the Russell, as we had shown there, is coming off. It had like a 5-week win streak. Now it's starting to rethink that, Victoria. Are there any, do you make any moves yet, or do you just wait and see how this plays out?
I love staying put in my quality dividends. I've been staying put in my core tech. I know it's boring to do nothing. I feel like sometimes there's this desire to have to trade around it. But right now, the chop is so news driven. So if we get some bad tariff news, we could see it come back down. We get good tariff news. We get good spending bill news. Then everything's all hunky dory again. So for me, I'm holding on right now to see if we're going to break up or break down. Because right now we're going sideways, trending water, which is totally normal, right? We're up 17.5% off of the lows. This is a consolidation period, but right now I think it is a little bit of a crapshoot and very news-driven if we break up or break down. And yields may have something to say about that, and because we are paying attention. And inflation expectations, I think, is the one aspect we haven't talked about, which might be driving long-term yield expectations.
It's a global story. I know we're in the U.S., so we like to believe that we're the center of the universe. We're only 5% of the global population. There's a whole 95% out there that may think otherwise. And this is a global story, Jay. Japanese yields are up. German yields are up. By the way, German stock market is soaring.
All-time highs.
Like, the amount of money that appears to be floating around the world just blows my mind.
Yeah, and our equity market is lagging the rest of the world.
Yeah,
right now.
We're like the worst major performer in the world this year.
And we are in a little bit of that treading water. Like Victoria said, sideways is a direction. And I think given the sell-off post-Liberation Day, which turned into Liquidation Day, we're recovering. But now there's too many news stories to focus on. What shiny object is going to draw our attention next? And with a tariff story, boom, we could have a sell-off, we could have a rally. China negotiations were down to 30%. Wow, 30%. That's still going to kill margins, especially in the retail sector. So there are too many moving parts right now.
And quickly from the chart point.